I'm Ian Scott, a principal at Pomona Capital. For over 30 years, we've been investing in private equity secondaries for some of the world's largest institutions. Over time, we've learned what works and how to approach this part of the private markets with discipline. More than a decade ago, we asked ourselves a simple question. How do we take what we've done for institutions and make it available to individual investors in a way that truly works for them? That's what led us to create the Pomona Investment Fund, one of the first 40 Act funds to invest in private equity secondaries with a track record of over 10 years. When we built the fund, we focused on four pillars that we believe matter most in secondaries, what we've relied on for decades. First, we invest across hundreds of funds, representing thousands of companies. By diversifying across managers, sectors, geographies, and vintages, it helps mitigate risk that comes with concentration. After decades of building deep relationships in the market and working with many of the top private equity managers around the world, we have the information and experience to evaluate these funds. Second, we only acquire portfolios that we believe hold high-quality assets with growth potential. We end up passing on most of the opportunities that come to us. That's why Pomona Investment Fund consists mainly of buyout funds in developed markets run by managers with established track records. Third, we're patient, and we always want a margin of safety. That's one of the advantages of secondaries. We're often buying assets at a discount to their net asset value. Since the fund's inception, the average discount of our purchases has exceeded that of the overall secondaries market, by design as a means of mitigating risk. And finally, we focus on investments that are likely to see a liquidity event relatively soon. For example, a portfolio company may be acquired, or the manager may sell their stake to another private equity firm. Because the fund targets investments that are nearer to a liquidity event, it has historically delivered a greater proportion of realized returns than what you typically see in this space. With realized returns, you're able to lock in gains and recycle them into new opportunities. This is a key characteristic that sets the fund apart. Our approach has historically helped the fund capture much of the market's upside while experiencing significantly less downside on average when markets fall. For many investors, that balance has made Pomona Investment Fund a useful addition to traditional portfolios. It offers monthly subscriptions, quarterly liquidity option, IRA eligibility, simplified tax reporting, and a low minimum. Our goal has always been simple: to provide individual investors with a diversified, risk-conscious path into private equity built on the same foundation that has worked for our institutional clients for decades. Thanks for joining us, and we look forward to working with you.